There is a moment that most homeowners spend decades working toward. The day they make the final payment on their mortgage. The day the bank officially releases the lien on their home. The day the house is truly, fully, legally theirs. For most people, that moment comes with a feeling of security and accomplishment that is genuinely earned after years of payments, years of sacrifice, and years of careful financial management. That feeling of security is real. But there is something that happens the moment a mortgage is paid off that most homeowners are never warned about. Something that, depending on the county and the state where the property sits, actually increases a specific and serious type of fraud risk rather than reducing it. And the homeowners most affected are seniors who own paid-off homes in markets where property values have risen significantly over the years, which describes tens of millions of people across this country right now. Before going through exactly what this risk is, what it looks like in practice, and what to do about it today, take a moment and share this with someone you know who owns a paid-off home, a parent, a sibling, a neighbor who just made that final mortgage payment, a friend from church or the community who has lived in the same house for 30 years. This information matters most to the people who are least likely to hear it from anyone else, because the institutions that could warn them have no financial incentive to do so. One share from you could protect someone's home. Share it now and then come back. Here is what actually happens to fraud risk when a mortgage is paid off, and why the security that homeowners feel at that moment is partially misplaced. When a home has an outstanding mortgage, the lender holds a recorded lien on the property. That lien shows up in every title search, every county property record, and every attempt to convey or transfer the property. To sell the home, to refinance it, to do almost anything significant with the title, that lien has to be satisfied. The lender's involvement in any transaction creates a built-in verification checkpoint, an additional set of eyes, another institution that has a financial stake in making sure the property transfer is legitimate. The moment the mortgage is paid off and the lien is released, that checkpoint disappears. The property is now freely transferable, with no institutional involvement required beyond what the county recorder's office processes. And county recorder's offices, which are the agencies that record property deeds and title transfers in every jurisdiction in the United States, do not independently verify that the person transferring the property actually has the legal right to do so. They record what is submitted to them. If a fraudulent deed is submitted that meets the basic formatting requirements of the jurisdiction, it gets recorded. The fraud becomes part of the official public record. This is the vulnerability that deed fraud exploits, and it specifically targets paid-off homes for a reason that is straightforward once it is explained. A home with a mortgage cannot be easily stolen through deed fraud because the lender is in the way. A home without a mortgage, particularly a home with high equity value in a desirable market, can be fraudulently transferred through a forged deed with far fewer obstacles. The criminal does not need the homeowner's signature in many cases. They need a document that looks like a properly executed deed and a recorder's office that will process it. Let us walk through exactly how this fraud operates in practice, because understanding the mechanics makes the protective steps make complete sense. A criminal identifies a property that they want to target. The target is typically a paid-off home with high equity value. Criminals often look for homes owned by seniors, particularly seniors who live alone, who travel for extended periods, who spend part of the year elsewhere, or who are in care facilities. They look for owners whose attention to the property records may be lower than average. They pull the property records, which are public documents available in most counties through an online portal. They confirm that there is no active mortgage lien. They identify the owner of record and the deed description of the property. They then create a fraudulent deed that purports to transfer ownership of the property from the legitimate owner to a fictitious entity or to themselves. Deed forgery has become easier and more common as property records have moved online, and as the formatting requirements for recorded documents have become more standardized. The fraudulent deed is submitted to the county recorder's office, either in person or in many counties now electronically, and it is recorded. The criminal now has a recorded deed that on its face shows them as the owner of the property. From that position, the criminal typically tries to monetize the property quickly before the fraud is discovered. The most common approach is to take out a loan against the property, using the fraudulent deed as evidence of ownership. This is called equity stripping. The criminal borrows against the property's value, receives cash, and then defaults on the loan, leaving the legitimate homeowner with a lien against their property that they did not authorize. In some cases, the criminal attempts to sell the property entirely, finding a buyer who does not conduct a thorough title search or whose transaction moves too quickly to catch the fraud. In other cases, the criminal rents the property to tenants, collecting rent from people who believe they are dealing with the legitimate owner. The legitimate homeowner often does not discover the fraud until the loan goes to collections, until a stranger shows up claiming to have purchased the home, until a tenant refuses to leave a property the homeowner had not rented to anyone, or until a routine check of county property records reveals a deed the owner never signed. At that point, the recovery process begins. And the recovery process is expensive, time-consuming, and emotionally devastating. Proving that a recorded deed is fraudulent requires legal action. An attorney must file a quiet title lawsuit, a legal proceeding in which the court determines who actually owns the property and orders the fraudulent deed removed from the public record. The process can take 6 months to 2 years, sometimes longer. It requires attorney fees that can range from several thousand to tens of thousands of dollars. During the litigation, the status of the property's title may be in question, which can make it impossible to sell, refinance, or take out a home equity loan. And if a lender made a loan against the property using the fraudulent deed, fighting that lien separately may require additional legal action. This is not a new type of fraud. It has been documented for years. What has changed is the scale and the sophistication. The combination of online public property records, document creation software, and electronic deed recording has lowered the technical barrier for criminals to execute this fraud. And rising property values over the past several years have increased the financial incentive. A paid-off home in a major metropolitan area or in a desirable suburban market may represent $300,000, $500,000, or even over $1 million in equity. That is a significant enough prize that organized criminal operations target it systematically. The FBI has specifically identified deed fraud targeting elderly homeowners as a growing threat category. The Consumer Financial Protection Bureau has issued guidance on the risk. State attorneys general in multiple states have issued public warnings. And yet the majority of seniors who own paid-off homes have never been told this risk exists, because the institution best positioned to explain it, the lender that was involved in the mortgage for decades, released the lien and closed the file the day the mortgage was paid off. Now let us talk about what to actually do, because knowing the risk exists is only half of what this video is for. The other half is the practical protection that any homeowner can put in place without an attorney, without any specialized knowledge, and without spending more than a few minutes. The first protective step is to enroll in your county's Property Alert Notification Program. This is the single most effective and most accessible protection available to any homeowner. Many counties across the United States now offer a free service that sends an automatic notification to the registered homeowner whenever any document is recorded against their property. The notification goes out within 1 to 2 business days of the recording. It identifies the type of document that was recorded, the date, and in many cases, the parties named in the document. If a fraudulent deed is filed against a property and the legitimate owner is enrolled in the alert program, they receive a notification promptly. They may receive it before the criminal has had time to take the next step. At that point, the homeowner can contact law enforcement and an attorney immediately, and the chances of stopping the fraud before it progresses to a completed loan or sale are significantly higher than if the discovery happens months or years later. To enroll, go to your county recorder's office website and look for a property alert, fraud alert, or homeowner protection program. Search your county name followed by property fraud alert or deed monitoring. Many major counties have had these programs running for several years. Some counties are still implementing them. If your county does not yet offer the program, your state attorney general's office or state land records agency may be able to point you to an alternative. In most counties where this program exists, enrollment takes about 5 minutes and is completely free. Enter your property address. Provide your email address or phone number. The system does the rest. You will receive an alert if anything is filed. This takes 5 minutes and costs nothing, and it is the most important single thing a homeowner can do to protect against deed fraud. The second protective step is to check your current property records and confirm that what is on file matches what you expect. This should be done now and repeated annually. Every county in the United States maintains a public database of recorded property documents. In most counties, this database is accessible online through the county recorder's or county clerk's website. Search your county name followed by property records search or recorded documents search. You should be able to enter your name or your property address and see a list of all documents recorded against the property. When you pull your records, you are looking for the most recent deed of record. It should show you as the owner. If you have recently paid off a mortgage, it should also show a recorded release or satisfaction of mortgage from your former lender. If you see any deed, transfer, or lien that you do not recognize, do not wait to investigate. Contact your county recorder's office, contact an attorney, and consider filing a police report. Early discovery is the most powerful advantage the legitimate homeowner has. While checking the records, also confirm that the release of your mortgage was properly recorded. In most states, the lender is legally required to file a document releasing the lien within a specific period after payoff, typically within 30 days to 90 days, depending on state law. If you paid off your mortgage but the county records still show the lender's lien, that is a problem worth addressing. Contact your former lender and ask them to provide a copy of the recorded release. If they cannot produce it, follow up aggressively, because an unreleased lien can create complications for future transactions and may require legal action to resolve. The third protective step is to make sure your homeowner's insurance policy includes title fraud protection, or to purchase a separate owner's title insurance policy if your current policy does not include this coverage. Many people purchase owner's title insurance when they originally buy a home and then file it away and forget about it. Title insurance for owners covers certain title defects and fraudulent conveyances that occur after the policy date, depending on the policy terms. However, many standard owner's title policies are one-time purchases that cover defects existing at the time of the original purchase, but may not cover deed fraud that occurs after the policy date. There are enhanced owner's title insurance policies available that specifically include deed fraud coverage and that cover fraudulent transfers occurring after the policy is issued. The cost of these enhanced policies varies, but is typically a one-time premium that is modest relative to the value of the property being protected. Call your title insurance company or contact a title insurance agent and ask specifically about coverage for post-issuance deed fraud. Ask whether your current policy covers it, and if not, what options are available to add that coverage. This conversation should take no more than 15 to 20 minutes, and it gives you a clear picture of where your coverage currently stands. The fourth protective step specifically applies to seniors who travel for extended periods, who spend part of the year at a different residence, or who may not be monitoring their property closely for weeks or months at a time. Deed fraud is more likely to go undetected for longer periods when the homeowner is not present and not watching the property. If you are away from your primary residence for an extended period, consider asking a trusted neighbor, a family member who lives nearby, or a property manager to do occasional visual checks on the property. Look for any signs that someone is using the property without authorization, such as unfamiliar cars in the driveway, lights on inside when they should not be, or mail accumulation that suggests correspondence addressed to someone who does not live there. Also ensure that your mail is being properly forwarded or collected when you are away. Fraudulent lenders sometimes mail correspondence to the property address, and an alert piece of mail, even something as simple as a notice from a mortgage company the homeowner has never heard of, can be the first visible sign that something has gone wrong. The fifth protective step is to have a conversation with a trusted family member or close friend about where your property documents are kept and what to do if something looks wrong. The property deed, the release of a mortgage, any title insurance policies, the property survey, and homeowners insurance documents should all be stored in a secure location that a trusted person knows how to access if needed. If you are incapacitated or unavailable for any reason, that person should know to check the county property records periodically and to contact an attorney immediately if anything looks wrong. This is not a morbid conversation. It is a practical one. The homeowners most vulnerable to deed fraud are often those whose trusted network is not aware enough of the property situation to notice a problem and respond quickly. Closing that gap, making sure at least one other trusted person knows the basic picture of the property, where the records are, what the property records should look like, and who to call if something seems wrong, is a straightforward protective step that costs nothing but a conversation. Now let me take a moment to address something that comes up consistently when deed fraud becomes a public topic, because it creates confusion and worry that can prevent people from taking the right steps. There are companies that market home title lock or title protection services, often as subscription services to homeowners who become aware of the deed fraud risk. The marketing for these services can be alarming, and the implication is often that without a paid subscription, the homeowner is completely vulnerable. This framing overstates what these services actually do, and understates what free options already provide. Most home title monitoring services do not protect against deed fraud. They monitor recorded documents and notify the homeowner when something is filed, which is the same function that county fraud alert programs already provide for free in many jurisdictions. If your county already offers a free property alert program, a paid monitoring service that offers only that function is providing nothing you cannot get for free. Additionally, these monitoring services cannot prevent a fraudulent deed from being recorded. No private service can stop a document from entering the county recorder system before it is processed. The value of any monitoring service, paid or free, is early detection, not prevention. And early detection is already available for free through county programs. That said, if your county does not offer a property alert program and you want the monitoring function, a reputable private monitoring service can fill that gap. The key is to understand what you are paying for and to ensure that the price is reasonable for the service provided. Do not pay for services that promise to prevent fraud or guarantee recovery, because no private service can deliver either of those outcomes. Here is the complete action list, organized by priority and time required. This week, enroll in your county's property alert or fraud monitoring program. Go to your county recorder's website, find the program, and register. This takes 5 minutes and costs nothing. This week, pull your county property records for your home and confirm that the most recent deed shows you as the owner, that the mortgage release is properly recorded, and that there are no unfamiliar documents on file. This takes 10 to 15 minutes. This month, call your title insurance company and ask whether your current policy covers post-issuance deed fraud. If not, ask what options are available. This takes about 20 minutes. This month, make sure at least one trusted person knows where your property documents are kept and understands the basics of what to watch for. Have that conversation and make sure the relevant documents are organized and accessible. Ongoing. Check your county property records annually, review your homeowner's insurance coverage annually, and maintain the property alert enrollment so you continue to receive notifications. Paying off a mortgage is a genuine financial milestone. The security that comes with owning a home free and clear is real. The additional steps described here are not a reason to feel less secure. They are the reason to feel more secure, because they close the specific gap that opens when the lender steps away and leaves the homeowner as the only one watching the property records. 5 minutes of enrollment, 10 minutes of records review, 1 phone call to an insurance company, 1 conversation with a trusted person. These 4 actions, taken once and maintained going forward, put a homeowner in the protected category, where the fraud risk that specifically targets paid-off homes simply has nowhere to take hold. This video is for educational purposes only. The information shared here reflects general knowledge gathered from publicly available sources, including YouTube, Google, news media, government agency websites, and other publicly available resources, and represents personal opinion only. It is not legal or financial advice for any individual situation. Deed fraud laws, recording office procedures, title insurance terms, and available protective programs vary significantly by state and county, and may have changed since this information was compiled. Always confirm the specific resources, programs, and legal options available in your jurisdiction directly with your county recorder's office, a licensed title insurance professional, or a qualified real estate or estate planning attorney before making decisions based on information in this video.